Okay, so today we're gonna touch briefly on backtesting. What is backtesting and how to backtest your trading strategies. So firstly, backtesting is testing your trading strategy by using the past data to see how it would have performed. All right, so that would mean you just going back into the charts and executing your trading strategy on the price data as you see it here to see how it would have worked out. We'll go through some examples shortly. So, and another way that we can do backtesting is we can use the replay feature in TradingView. But this is a paid feature. It isn't necessary for backtesting, but because you can't do it the way I'm going to show you, but if you're willing to get the premium version of TradingView, you can definitely take a full advantage of the replay feature on TradingView because you can go back to any point in time and be able to analyze data from there forward. You also have the option to actually enter trades with the buy and sell buttons on the bottom right here with lot sizes, etc., and capitalize on trades by backtesting, seeing how the trading system would have worked out using this feature. So this is actually a very powerful tool. So I would recommend it if you guys, well, later on in your trading journey, you should definitely try to get this feature. But in the meantime, as I said, you can 100% practice backtesting without this feature. And just as I said, going back to the previous charts and analyzing the data there, applying the strategy on the charts there, and seeing the outcomes. So we take this off in the meantime. And so let's kind of get back to a middle area. We pretty close to price action, but as I said, backtesting would mean any kind of previous price data. All right, so we start at this area here, for example. So I'm just going to show a simple strategy using market structure, support and resistance, and Fibonacci. So this is how we will backtest a strategy like that. We had price coming all the way down here, forming bearish momentum, pushing to the long side, creating lower highs and continuously trading below them. So that is cementing in our minds that prices is making, or sorry, or was making bearish structure coming all the way down here. All right, so again, let's map out these structures so that you guys can see clearly. We have lower highs forming on here. The lower highs, prices continuously making lower highs and continuously trading below. That means that there's a high probability that price will continue to trade lower until it breaks a high. So again, we had all these lower highs forming down here, and then we had a break of structure. This was the last lower high that price created. As you can see, price failed to trade below, forming an area of support at the bottom, creating a lower high, failing to trade below, and now we are trading above the lower high, meaning we have broken bearish structure. Because as I said before, bearish structure is a series of lower highs and lower lows. If price is making new highs, then that is bullish structure. All right, so that's a simple way to understand it. So we had a breakup structure here. Price broke above the lower high and continued to trade above. So if price broke above this area of resistance here and retested it as newfound support, we can only assume that there's a higher probability that price will continue trading to the upside now, which it did. So we mapped out all these lower highs, tracking the bearish momentum, saw where it ended. Now we are seeing a Fibonacci, a potential Fibonacci move here. So you pull your Fibonacci from the bottom of the bullish wick that created support to the top of the bullish wick that created resistance. All right, so it should be here, this area here. And as you can see, we have a swing low and a swing high move now that we measured. We can see that price had a bearish counter trend, forming lower highs, pushing down to a lower price reversal zone on Fibonacci retracement tool. Price came all the way down to the 61.8 area, which you see here. Price came all the way down to 61.8. It formed support at the area, created a lower high again, following the regular structure of the bearish counter trend, you would expect price to make a new low, but it didn't. It maintained support and instead created a higher low, which gave us an indication that the counter trend has finished and we should expect bullish momentum in the markets now. So we had a high low being formed here, and this is where we could have taken advantage of the trade now. So I am on 30 minutes. I want to stick to one time frame to show the strategy. So how to show how everything aligns. We had the swing low, we had the swing high, Fibonacci retracement tool measured that price retraced at the 61.8 level, and we could expect TPs. These are our TP levels on the fib here. As you can see, the negative 27 and the negative 61.8, which price did reach after a 61.8 retracement down here. All right, so once you again understand the patterns in the market and you are confident in how the tools play out, because in a previous video I mentioned that when you have a retracement on one of these levels, you could expect price to see a high of at least the negative 27 area or the negative 61.8 area, which it definitely did reach. All right, so again, not to get sidetracked, I want to focus on how I would have entered this trade very easily. So we had the 61.8 retracement. We have the higher low forming, and we have a break above previous resistance, right? So price is trading above this previous high here now. We broke above, price is trading above on the smaller time frames. You would have seen that this is also a lower high. And I would have gotten in somewhere in the beginning of these candles here with my stop loss below structure here. I am seeing that it is 98 pips, 98 points. It does not matter. All right, we're looking at it from a chart perspective, not from a pip perspective or money perspective. This definitely helps in how you manage your trades when you look at it from that perspective. So we have our entry here. We have our stop loss below here. And we're looking for, as I said, we would usually look for a 1 to 2, which we did achieve. So this was a very profitable trade. And we even got a 1 to 3 on this trade. Actually, we got a 1 to 4 on this trade. So as I said, this is a very, very profitable trade. And I was only able to identify something like this because I have an understanding of market structure, how to use fibs efficiently, how to read price action and understand candlestick analysis. All right, so this is a very simple execution of a backtested strategy. So you want to, again, go back to the past data and you want to do this multiple times. And I really mean like hundreds of times, because who has the most reps has the most results. So I'd recommend definitely backtesting, journaling your backtested trades. That way you're able to better identify how to enter the market when you see the market conditions that satisfy your need to execute a trade. You would know when to exit the market. That means you would know the market criteria to show you when you are wrong. That is, if structure is forming against your position, for example, and you would know where to exit if you are right by following your R to R multiples. Again, we have a rule. We do try to close at 1 to 2. We don't really aim for more than 1 to 2. But if we do get a 1 to 3, we will usually let a partial take out the 1 to 3. That way, we have a rule in place so that we do not hold trades too long and get greedy, hoping for more profits in the market. All right, so again, finally, I just want you guys to really practice being consistent in trading. Always practice your strategy, backtest, backtest, backtest. All right, collect as much data as possible. Backtesting also helps in finding pairs that trend more or pairs that trade sideways more, which could help in your strategy. It helps you identify which major news events will have a great effect on this pair and whether or not you should even be in a trade before a particular news release. So it helps you understand fundamentals once you take it very seriously also. And lastly, you're able to get the performance of your strategy. That is, you're able to get the win rates, you're able to get the average R to R, per trade with your strategy, be able to see the average profits your strategy could provide, and the average drawdowns. Very important. Don't just look at the good side. You also have to look at the losses and the potential drawdowns also. All right, so that is pretty much it for the backtesting strategy video.